Hey guys, what's going on? Welcome to the video. So we had quite a volatile week in the stock market this past week. In this video, we're going to be going through everything that transpired last week and what we can expect to happen next from that information. Then we'll be going over the major catalysts coming this week, some possible scenarios that could play out next, and then some trade ideas for the week ahead. Let's go ahead and get into it. So what triggered the market's dump this week was the August CPI report, which was on Tuesday morning. Inflation came in at 8.3% year over year versus the analyst expectation of 8.1%, and it was up 0.1% month over month, while analysts were expecting a decrease of 0.1%. So overall, it was a 0.2% miss to the upside, and by all means, that is not a massive miss, but what caused the stock market to dump was the positioning of the big money. So going into the report, the S&P rallied over 5% in just the 4 days going in, and as we talked about in last week's video, if the market had a big rally going into a major catalyst like this, then the odds are is that it'll turn into a sell the news event, which is exactly what turned out to happen. There was also a bearish technical setup on the S&P 500 going into the CPI report that I tweeted about, and that got us nicely positioned in a put option hedge right before that dump happened, so make sure to follow me on Twitter if you are not already. I don't post super often on there, but when I do, it's usually a pretty high conviction setup. Alright, so now let's talk about the big catalyst coming up this week, which is the FOMC meeting. This will include the rate hike decision, a summary of economic projections, and Powell's speech. So the meeting is on the 20th through the 21st, with us getting the rate hike decision on Wednesday the 21st at 2 p.m. Eastern Time, and Powell having his speech 30 minutes after that. So currently the market is pricing in odds to have an 82% chance for a 75 basis point hike and an 18% chance for a full 100 basis point hike, aka a full percentage hike. So if these odds stay relatively the same going into next Wednesday, it is highly likely that the Fed will go with the 75 basis point hike, because as we've talked about on this channel before, the Fed loves to make decisions in line with what the market is expecting. They are not a fan of big surprises. So as long as these percentages stay around the same, 80%, 20%-ish around there, I think it is highly likely that we will see that 75 point hike in the market to potentially rally off of that. In my personal opinion, if the market drops more going into the FOMC meeting and the Fed goes with a 75 point hike, aka no surprises, this has a high chance of turning into a buy the news event and potentially giving us another tradable rally. Now talking about Powell's speech, which usually is the real market mover, we have two big things to consider. Number one, because CPI came in higher than expected, that can give Powell something to speak hawkishly about and send the market downwards. But number two, and something that could potentially matter more, is the huge miss that we saw on FedEx's earnings. So FedEx is one of the biggest indicators for how our overall economy is doing, and because their business is getting absolutely slammed this quarter, that is a big sign that the economy as a whole is getting ready to slow down, and the Fed knows all about this. They were definitely looking at that FedEx earnings report. So the purpose of raising rates is to slow down the economy, which then reduces inflation. And because FedEx just reported what is going on, this could kind of tell the Fed, okay, what we're doing now is really starting to work. Maybe we should slow down a little bit. And if Powell says anything like this during his speech, it can result in a big move to the upside. Now that is all speculation and a scenario to consider. I am certainly not an economist myself, but it is something that I'll be looking to trade if the market drops more into the meeting on Wednesday. I personally would like the odds a lot if we drop into the event for a buy the news event. Alright, so now let's take a look at the technical setup of the S&P 500 tracked by the SPY and talk about some key levels and what could potentially play out next. So we've talked about the 50-day moving average being the key pivot point for the market, and after last week's gap down below it, sellers are now well in control. It also broke below the key trendline support that we've been talking about. This happened on Thursday, which then triggered Friday's drop and gapped down to the next support range below at 380 to 382, which was able to hold as support. Now going into next week, buyers need to hold above 380 to 382 to avoid more downside, and now 390 is new key resistance, which buyers would need to reclaim back above to potentially set up a false breakdown reversal and upside back towards that 400 level next. On the downside though, if that 380 to 382 support range is broken below, expect another leg down towards the low 370s next. And one more thing to watch is on the S&P futures chart, this trend line dating back to August 30th has been key. The break above resulted in the initial breakout, and on each backtest of the trend line, it has acted as key support. On Friday, you can see that it bounced right off of that. So definitely have this trend line on your charts, and if the market drops more It could potentially be a level where you try dip buys on trades each time that it tests to scalp the SPY or anything else, however you trade options or shares. Now taking a look at a few individual charts and setups now, unsurprisingly, the sector that we've talked about in pretty much every single recent video is the solar sector, ticker symbol TAN. So like we've talked about, it's the #1 leading sector on MarketSmith and continues to show major strength on down days in the market. Stocks like this that base consolidate while the broad market goes lower are like springs coiling up. Once the broad market finally goes back up, these are the stocks that are going to have that built up energy released and explode to the upside. TAN and solar stocks should definitely be on everyone's radar for this reason. And the top leading stocks in this sector continue to be Enphase, ticker symbol ENPH, showing absolute insane strength during the market's decline and now basing at highs. On watch for a break and hold above 124.5, which can trigger the next leg higher. And then also First Solar, ticker symbol FSLR, which is arguably showing more strength than Enphase, though it is overextended here, and you'll want to see it forming a larger base or flag pattern next before potentially buying a breakout over that 140 breakout level. A decent sized pullback or just sideways consolidation for multiple weeks would be ideal for this name, as when a stock goes straight up like this, once it does break out, that breakout is now prone for failure if it does not have that correct base before breaking out. The lithium sector also continues to show major strength in names such as Albmarle, ticker symbol ALB, which is chopping around at the all-time high breakout level, and also Livent, ticker symbol LTHM, doing the same. Lithium Americas, ticker symbol LAC, is the one that has the highest potential upside in my opinion, as it waits on approval of the Thacker Pass mine, which can act as a major catalyst in the future, though it has not yet shown strength like those others. So personally, I am still cautious on this one and have not entered. I'm watching the 200-day moving average at around 27.2 as a possible dip buy spot as long as it continues to act as key support. But overall on this one, we need to see a close above that 31.7 to 32.4 supply zone for it to be a strong conviction setup, as we saw that rejected 4 different times last week before moving downwards and breaking that 30 level. Along with solar, these lithium stocks overall though look primed to lead the market once it turns. For now, patience is best until that broad market turns, and then these can finally potentially explode into new highs. And one more leading stock to keep on your radar is Shockwave Medical, ticker symbol SWAV, which is now on its 6th week of basing near all-time highs and continues to show major relative strength during down days. Like I've been saying, a lot of these names are like coiling springs during this basing period and will likely fly once the market does turn. If you look at the 2020 crash, the growth stocks that broke out to new highs first are the ones that had the largest gains and led the next bull market, such as Zoom, ticker symbol ZM, Peloton, C Limited, Square, and more. So overall, a super important week coming up from the stock market. We talked about those expectations, what we could see at that FOMC meeting in different scenarios. We also looked at those key levels on the SPY, depending on which breaks, that can give us the next direction, and also a few of those individual leading stock setups. So hope you all enjoyed. Hope it provided some value to you. If so, make sure to hit the like button and subscribe button. It helps me out a lot, and I would greatly appreciate that. For anybody interested in joining the private Discord chat and getting my personal trade alerts, that is the first link down in the description. We had some very nice SPY trades this past week. Good luck trading in the market next week. I will catch you all next time. Peace out.